Welcome to the Home Building Hub, your essential podcast guide to building your new home. Hosted by industry experts Colin Bischoff and Darren Brennan, this conversational podcast will help better educate you about all things new home building so you can avoid costly mistakes and enjoy your building experience to the fullest, no matter which home builder you choose.
Hey there, folks. Welcome to the Home Building Hub. You're with Colin and co-host Darren Brennan, as always. And today, Daz, we have a bit of an update. Government's come out with a little something. So October 2025 announcement for the first home buyer deposit scheme. We're going to give you a bit of an insight of what it is, how it works, how it looks, what you can do, what you can't do, what the caps are, all that sort of jazz, just to give people a bit of an insight, Daz, as they cruise on into work or whatever it may be. How are you going, buddy?
Mate, going really well. I mean, again, it's a great announcement. We're all encouraging of any government incentives that are going to encourage first home buyers into the market. So I think it's fantastic. I think like any of these, hopefully we'll cover a couple of the things to be looking out for as well, just at the end of the episode. So listen right the way through, yeah?
Yeah, that's right. I think the announcement's great, and then all the questions come, don't they? So I guess what has been announced on the 25th of August 2025, the government has announced that it will start, expanding the 5% deposit scheme for all first home buyers from the 1st of October this year, 2025. They will guarantee part of the loan so buyers can avoid lenders' mortgage insurance. That's probably the quickest roundup, but we'll start moving into a bit more detail. So, Daz, maybe a high-level snapshot of how it's going to work?
Yeah, for sure, mate. So from the 1st of October 2025, first home buyers can purchase with a 5% deposit, no income caps, which is one of the big changes, unlimited places, which is another one of the big changes, and higher property prices caps, which is, again, just expanding the opportunity for people to find the right property, not feeling like, hey, I'm a first home buyer and I've got a bit more money saved and therefore I miss out. No, you don't miss out. The caps have been lifted and they're significant, and we'll talk our way through those. As you mentioned in the intro, Cole, the government guarantees part of your loan so that you can avoid the lender's mortgage insurance. And that's if you default on the loan. What they're going to do is the lender's mortgage insurance, and in this case, the government's guaranteeing that, and so there's no insurance policy in place as to guarantee for the government. That's there to, if you default and can't pay your loan, and the house has to be sold, and there's any gap in that, they will cover any gap back to the bank. So they're basically protecting the bank in that situation. So on a $750,000 loan, you can buy with a 5% deposit, which is $37,500. Typical lender's mortgage insurance on a loan at that value, so what they call a 95% LVR, would be $30,394, which that removes that entire amount. That's your upfront savings. So basically, you're going to save 30 grand up front on lender's mortgage insurance. It's significant. Like, it's a big barrier for people into the market. It takes people a long time to save 30 grand. The other part is you can borrow at 5% rather than at 20%, which is where lender's mortgage insurance drops off. So if you've got a 20% deposit, there's no lender's mortgage insurance. So the big difference there, you only have to save $37,500 to not pay lender's mortgage insurance or to get a loan versus $150,000. So you need $112,000 less money up front to be able to get a loan, which is fantastic. Like, that shaves years off people trying to save enough, and get beyond that lender's mortgage insurance. If you listen to someone like the Barefoot Investor, he suggests go and save 20% because you're avoiding this. Now, obviously, the more money you've saved, the better position you're in. From a financial point of view, the lower your repayments are. So, yes, we're not discouraging people to save more money, but if the right property comes along and you're in a position to be able to purchase, then not having to pay the lender's mortgage insurance is going to save you heaps of cash. It's going to get you on the property ladder earlier, and you're going to be in much better shape. So, yeah, it's a really good scheme. I think from that point of view, um, I think the savings are fantastic. I think it's a really good initiative the government's come out with. So, and obviously it's been there before, Cole, but these improvements just make it so much more valid in the marketplace, I guess. So, yeah, maybe tell us a bit about the caps if you've got some info on that for us, Cole.
Yeah, so one of the areas, the main change, the reason a lot of people haven't used the scheme previously is because the caps weren't high enough. They weren't in line or in reality with how much it costs to, I suppose in our space, build a house and buy a house and land package. The cost of that was more than what the cap was, so it didn't really line up. But they've adjusted those caps. So I'm just sort of going to cruise through those now, Darren. But the two categories they've got is sort of capital cities, I suppose, and what they describe as regional centres. So these are the bigger regional hubs, satellite city, whatever you want to call it, versus, I suppose, more regional, that outer regional areas that they've got different caps for. So New South Wales, the capital city regional centre is now 1.5 million is the cap, was 900k. And then for their regionals, they've gone, was 750, now 800k. For Victoria, the capital cities and regional centres, 800k it was, and now it's up to 950k, which definitely gets you a little bit more bang for buck in terms of reality of a package here in Victoria. Those regional areas has stayed actually 650,000. Queensland 700,000 was gone up to 1 million now, Darren, for a new one. And for the regionals, 550 it was, up to 700 in Queensland. Over to WA, capital city regional major regional centres, 600k has now jumped up to 850 for them, and their regional, I guess, areas, the further ones out, 450 jumped up to 600. So some really good savings, I guess, expansions in terms of those caps. South Australia has gone up quite a bit, so 600k it was, up to 900k now. Their outer areas, 450 up to $500,000. Down to Tassie, 600 has gone up to 700k. Their out of areas has gone up 100k as well, so 450 to 550. ACT's gone from 750 to 1 million, and Northern Territory remains $600,000. So, yeah, across most of those, significant increase. So wherever you're listening from, hopefully that helps. But really, if you want to find out, just dig a bit deeper. There's a site you can go to. It's housingaustralia.gov.au, and all the caps and the info will be on there for you.
I think it's also interesting, Cole, coming from we're Victorian based, seeing $1.5 million in New South Wales, you go, geez, a lot of bloody money for a first home buyer to be buying a house. So that's pretty significant. The other side of that is, regional areas in South Australia at 500 grand means there's got to be a lot of property under 500 grand in South Australia, and that for me seems really low. So there's both ends of that scale that, looking at those numbers, it's really interesting sitting here in Vic, seeing the numbers that we've got. And I'm surprised even the regional Vic, they didn't pump up a little bit, at 650. Some of the areas I'm living regional, I live in Ballarat, and 650, you can certainly buy a home. But again, if you want a slightly nicer home, you're probably nudging towards maybe 750.
Yeah.
So, it's gonna have an impact on what people can actually still choose. Whereas some of the other areas, you got lots of choices, which is fantastic. So,
and we don't profess to know whether they're going to be good value or not, or realistic, but they're the numbers. Talk to a sales consultant, talk to a real estate agent, etc. Get on REA and have a look. But yeah, so our example in Victoria is definitely, you can get a pretty good package, well and truly under 950k for sure.
Absolutely.
But yeah, like you said, regional 650, sort of a little questionable. Some yes, some no, unless it's further out, does it maybe? But
sure.
So you'll know in your own state where you are as to, or the people who you can talk to will know, obviously locally, what's realistic for you. So, yeah.
I guess the next question, Cole, and I'll answer this one, is who can use it? And so it's all first home buyers, there's no caps on places or limits, which is, again, used to be, I'm pretty sure it was 35,000 was the limit previously on the government scheme. Property price caps obviously have been lifted. We've just spoken about those. You must be at least 18 years old. You've got to be a citizen or a permanent resident. You have to buy as an owner-occupier, so you can't be buying this as an investment property. You must move in within 6 months of settling the home. And you have to take out a principal and interest loan for a maximum of 30 years with a participating lender. So, it's, again, there's terms and conditions like anything, but none of those are too arduous, I would have thought, Kyle. I think they all fit in pretty nicely.
Yep.
How
No, they're
about the
good.
property?
Yeah. The property. So it must be residential and within the price cap, obviously. Eligible types of properties include existing homes, house and land, vacant land with a separate build contract, which, is house and land, basically. Anything off the plan. They do have specific timing rules around the construction timing. And obviously, in the case of our world, the land needs to be titled before the home loan date can kick off. Can't build the house unless it is titled. So, you'd be going for that application closer to that period. But that's it. So it's sort of a pretty much, in terms of building a home or buying an existing one, Daz, it's, floodgates are open. I think you can pretty much do it on most things. Yeah.
For sure.
Very interesting.
The next one is you've obviously got to live in it. So it's owner occupiers only, as you mentioned earlier, move in within 6 months or within 6 months of the occupancy certificate for new builds. And keep living there whilst the guarantee applies. Now, I'm assuming with that, Cole, without having that information, is that guarantee applies until you've paid down 20% of your loan.
Yeah,
That
I
being
think
said,
that's what adds up. Yeah,
yeah,
that's what makes sense in
there
my
may
mind
be
too.
some difference in that, and I don't know the answer if there is a different answer to that. So I'm sure if someone's listening or watching and they do know the answer, drop it in the comments of the podcast wherever you're seeing it, and obviously make sure it's accurate, because we don't want to be portraying anything that's not accurate there. So again, if we find out some further detail on that, we'll likewise do the same. The interesting part is you can't rent it out. So you just can't be going, great, I'm going to now turn this into an investment property, I'm going to rent it out. I assume that then LMI would apply in some way, and you've got to, they'll come and ask lots of questions on that one. So, how about the loan itself, Cole? Tell us a bit
Yeah.
there.
Yeah, so I guess we're not finance people, Daz, but just based on what's been reported, the loan itself, one of the questions that I had in my mind was, is it only applicable for the big four, for example? But I guess reporting says that it's not. So just says with a participating lender, principal and interest repayments, 30-year term, as Darren said, with 3 years for the build. Deposit must be greater than 5%, less than 20%. As we've sort of explained, but the report says Housing Australia, they want to promote a wider range of participating lenders, including customer-owned and regional banks. This policy sits within Labor's $43 billion housing agenda. The government says 180,000 plus first home buyers will have already been assisted since 2022. So hopefully that's true, Darren, and it's not just you're restricted, because a lot of lenders have a lot of good solutions for people in all kinds of situations, as we learned from Scott, the broker Baker at Toast Finance, and obviously our finance friends previously that we've had on. It's really important to find someone who knows what they're doing for you as a broker, find the right solution for your house and land package or for your home. And it looks like, based on what's reported, there's going to be a little bit of freedom to choose some lenders that are not just the standard four.
For sure. What are your thoughts on what it'll do for the new home building market, Cole? Personally, how you're playing out?
For our market, I mean, it'll be good. It's been interesting the last 12 months, I think, with the interest rate cuts. People have been internally, within our industry, have been hopeful is probably the word I'd use. We've been hopeful for 12 to 18 months that interest rate, the interest rate will come along and then the traffic will come through the centres and off we go. Hasn't really worked out that way, I would argue, but it's probably piqued a bit of interest and people are starting to sniff around a little bit and, contemplate and consider. But one of the things I guess that's been difficult is barrier to entry. So first home buyers have just not really been there because it's quite difficult to get into it into a house and land package. But with a scheme like this, Darren, I think that will open the door significantly. So the answer to that question, what we'll do for the market, just in my opinion, is that actually might be that little nudge that we needed to open up the retail market again, see more people through the doors and start asking those questions. For anyone working at a builder, it doesn't mean you're going to start making a whole bunch of sales next week and next month. The buying cycle still remains quite extensive. People need to build up their education, their trust and all that sort of stuff still. So that can take some time, but it will definitely start the process and get those wheels moving. Yeah, or turning, I should say.
My thoughts, Colin, and every time there's been a grant in the past, we've always seen lifting prices, rebates coming off land. I'm really hopeful that doesn't happen too quickly, and that the land developers out there don't go, hey, hold on, here's an opportunity, because it's happened every time. And much as they won't want me saying that, it has. That's the facts, right? So we certainly don't want to see that happening. We want to see the value in the market remain right now. I mean, it's certainly a great incentive, but is it the golden pill the industry's been looking for, the magic pill? I don't know. We won't know until time, right? And so I'd be really disappointed to see, rebates disappearing immediately and people thinking this is a great chance to start jamming prices up and taking away, really consuming that saving. And so, my advice to buyers is get in early, because that, if it does take off, then you will see a shift in that. There's expected rises in the second-hand property market, the established market. They're already talking about this is going to help drive up prices there. So the sooner you're in before that price drive starts to happen, the better chance you are of securing at the best price possible. So, nothing has changed, Cole. The best day to buy is today, and the next best day to buy is tomorrow. And unfortunately, we don't have a time machine to wind the clock back, so you can't buy yesterday. So jump in if you're interested. Do your homework quickly. You've got up until the first, and I think there won't be a lot of action on this until the 1st of October. But from then on in, I would suggest it's going to be, there'll be people jumping on very quickly, particularly on the titled land that's out there. So, go and do your homework really quickly. If you're in a position to start making some decisions, you might want to make sure you're talking to your broker, finding out all that detail and getting yourself in a position to be able to make some decisions fairly promptly.
Yeah, a few of those things we've discussed lots of times. So if you are a first home buyer and you're sort of listening, wondering what do I do, and first thing is finance. Go and get that. You've got a month to do it. Talk to a broker. Don't talk to a bank directly. Talk to a broker who knows new home construction. Or if you're buying, a second-hand house, you probably wouldn't listen to the podcast, but the same thing happens. But go to a broker. Don't listen to Uncle Gary. Don't go to a bank directly. The broker will find you the options. They'll know about this scheme. They'll map out the numbers for you and be prepared. That's number one. The other thing that we really got to be honest about, Darren, and again, we referenced about October, November last year. We said, and we don't want to sound salesy, otherwise we'd be talking about our own businesses all the time, but we don't. You should have bought, if you could have, back in October last year when there was massive, massive rebates available and plenty of titled land. This is Victoria. There's not much left. Like, it's been absolutely, investors have come through this last 6-12 months a lot. So now you add the first home buyers on there. This is going to make it interesting. So not only is the scheme appealing, but the land is drying up for titled land, and it will. So just being direct and open and honest is when Darren says today's the best day to do it. We don't mean that from a sales perspective. We mean that from a genuine, we know the lay of the land is, we know investors have been running pretty hot. Now you add an entire new segment being first home buyers back into this market. What do you think is going to happen? So take the month, get prepared, get your numbers. Don't go out display shopping and try and get something that's outside of your budget in the realm of what you can afford. Find out what those numbers are, your minimum and your maximum, and then go out there and start shopping, because that will take you. You're not going to buy the house in the next 2-3 weeks if it's off the plan, right? So it takes time. So definitely do that. Go and take some action while you've got the opportunity before everyone else jumps in and grabs them ahead of you.
Hey, Cole, I wanted to touch on one last part, which is one item the government is not discussing with the lifting of price caps is stamp duty. And so I did pick up a bit of research that I saw online that said in New South Wales, for example, where they have exemptions for stamp duty for first home buyers, it's not a full exemption up to the price cap. So a full exemption applies up to $800,000. So if you're buying a house under 800K, full exemption on stamp duty. Between 800,000 and $1 million, you'll get a sliding concession. At $1 million and above, though, you're now having to pay the full stamp duty, no concession, right? So the cap of 1.5 million would attract $68,000 in stamp duty, plus you'll need a deposit of $75,000. So you're going to need to save a fair bit more money, which the government's not talking about. So just, again, it's about being aware, I guess. Positives at $850,000, so a bit above the low end of that exemption area, the full exemption area, you're going to save about $25,300 compared to normal stamp duty, which is fantastic. At $900,000, you're going to save about $18,000 on the normal stamp duty amount you'd have to pay. So there is still savings there to be had, but if you're over $1 million in New South Wales, there's no stamp duty saving at all. So it's going to start to add up, and that's more money you're going to have to save. So again, do your homework, right? So that you make sure that you understand these things. I'm not sure of the examples in the other states right now. And again, we'll do our own research on that so that, we might put some info up on our socials and stuff on that info. But it's certainly worth being aware. Do your homework, talk to your broker, find out what happens, because you may actually in your head be calculating how much you need, but you might find out you need a bit more than that. So, you might be 20 or 30 grand short in some of these cases. It's a lot of money that you could be short. You're $68,000 at 1.5 million in New South Wales. So again, be aware, do your homework is the real answer on that.
Yep. Go to an expert. Awesome. There you have it. That gives you a nice little rundown of what's happening, and you can take it or leave it as you desire. So as always, we want to thank you for listening and those watching as well. And if you've got any feedback or topic ideas or questions, please jump on the homebuildinghub.com.au and the platform you're on. Please give us a 5-star review. We'd love that. It helps and pushes the podcast a little further out there, creating more awareness, which is something that we would love. So again, thanks for watching or listening. We appreciate that, and we look forward to seeing you on the next one.
Thanks for listening to the podcast, guys. And just our disclaimer, whilst we're all about providing value to you, this podcast should not be considered as legal or financial advice. It contains general information only, and you should seek out independent professional advice on your personal situation before making any legal or financial decisions.
1, 2,